Joined by Otto Waser. He's Chief Investment Officer at RNA Research and Asset Management. Otto, good of you to join us this morning. Tell me, what does this debt deadlock in the U.S. mean for investors?
The debt gridlock is unnerving for investors. It's very unnerving for investors. Ultimately, we will realize that this is only a blip. It hits the U.S. economy at a very fragile moment. The economy is not doing that well. So any sort of negative news that we're getting for the economy is negative for sentiment in financial markets. But eventually, we believe they're going to get the solution. It's only going to be a blip for the economy, and therefore it's going to pass.
What if it drags on, though? What if we get a temporary small increase in the debt ceiling and then we see this debate roll on again 6 months from now?
This is the worst outcome. The better outcome is obviously what President Obama is asking for, to have a debt ceiling that goes beyond the 2012 election. Otherwise, we have the problem again, and it's something that will weigh and will be a negative factor for markets that is here to stay.
And when it comes to the U.S. economy, we're going to get growth figures on Friday. That'll show us the soft patch, this patch that Ben Bernanke and others have told us is only going to be temporary. Do you believe that to be the case?
Well, yes, I think it's temporary. It's going to take quite a bit until the negative factors that we're seeing now are out of the system. We have an inventory correction. We have relatively high gasoline and energy prices that weigh on the United States. So eventually it's going to be temporary, but it's going to take some months until we're going to get back to reasonable growth.
And if we move to Europe, we see Moody's downgrading Greece today, also saying that perhaps this rescue package that Europe has announced isn't going to prevent restructuring in Ireland, Portugal. Do you agree with that? Have we seen the worst of the European debt crisis?
We have not seen all the debt restructurings that we're expecting. We have seen a small restructuring for Greece and very certainly more in the offing. It's not quite clear on the timing, but Portugal and Ireland are candidates, and we're not even sure yet how much money needs to be spent if Italy or Spain would be attacked by financial markets again. So overall, this thing is not over. We have gotten some direction, we've gotten some relief on the tail end of risks. Particularly the EFSF has now money to recapitalize banks, and I think that's an important risk removal of tail end risk.
But what you're saying is that we have not got enough from European leaders. So you have European leaders still squabbling over what to do, U.S. leaders still squabbling over what to do, all of this against the backdrop of a fragile global economy. What do you do with your money?
This is absolutely correct. I guess the best pillar that we have for equity markets at the moment is earnings. I mean, earnings have come in relatively as expected, a bit better in the United States than in Europe, but overall I think the pillar of support for markets remains earnings.
And which companies are you watching out for? What do you think is going to show the most strength in terms of sectors, in terms of individual companies this quarter? This
quarter, we have to start assuming that we have some slowdown in the industrial sector. Otherwise, in the medium term, we favor the industrial sector, we favor technology companies, we favor consumer goods companies, particularly those who can sell into high-growth Asian markets, luxury goods companies. These are our preferred sectors. We're shaving off a bit at the moment on those, but we're ready to buy into any blip. These companies that are the longer-term winner of the global trends. And what's your prediction in terms of the US dollar and the euro going forward over the next few months? We think the US dollar is a weak currency. We have interest rates at 0 for the next 1, 2, probably beyond that years. So the US dollar is a weak currency. The euro is a relatively weak currency. We have, as we've said, removed some tail end risk, but this is probably not enough to make the euro a strong currency. So we think both are weak currency. Euro dollar is going to be in a trading range, and I think the main beneficiary of those events is still the Swiss franc, where we don't think it's really turning around, and we're not in for a phase of Swiss franc weakness or euro strength. Otto Waser, Chief Investment Officer of RNA Research and Asset Management, thanks very much for being with us.